why AMC stock might be ready for another short squeeze. We're going to bring this article to your guys' attention because they do have some very strong points that I think you should hear. Now, on top of that, AMC did just recently pay down $85 million of, again, high interest debt, and we'll talk about that as well. Now, for vast majority of this video, we are going to be going over the data behind AMC, a price prediction for AMC, aka kind of look at the technicals, and then we are also going to talk about the economic calendar because things are going to get crazy this week. Now, let's get into all of this information. Let me know, baby, down below in the comment section, Eagles or the Chiefs? Who is going to take it home? Let me know your opinions down below in the comment section. So let's get into all of this information. Let's start with the data behind AMC and then get into the debt pay down and why AMC could be ready for another short squeeze here in just a moment. So AMC, as far as the Ortex data, just to get everyone caught up to speed, 23.04% short interest of free float. 118.66 million shares that are sold short. Cost to borrow average of 307%. Cost to borrow max at 358%. And cost to borrow minimum at 0.35%. Interactive brokers had us at 35,000 available shares to be lent out with a cost to borrow rate of 167.5%. So the data is looking very good with AMC. You're at the highest short interest levels that we have been at since the June rally of 2021. So just making that comparison alone should make you pretty excited overall for AMC. It sure does make me very excited, among a lot of other factors. Now, that's all we're going to talk about as far as the Ortex data. Now, if we look at the Stocko Tracker data for this week, I explained this more in depth in the last video, so I do highly recommend you guys watch that if you want a more in-depth breakdown of kind of how the puts in the money, the large amount of calls out the money goes into buying pressure for AMC. I'm just going to give you guys the raw numbers and a brief summary. So if you guys want more information on that, check out the last video. So for this Friday, 5,000 calls that are in the money, 293,000 calls that are out of the money. In the money puts at 98,000, out of the money puts at 268,000. So on both sides here, calls and puts, you have a lot of option activity. On the call side, that is out the money, and on the put side, that is out the money. So really, either way it goes, if the stock goes up, that's potentially a lot of buying pressure. If the stock goes down, potentially a lot of shorting pressure also could be put on AMC. That is very important to know, but this data does skew to a bullish reaction, or at least a bullish upside move, because 98,000 puts in the money, if those start to fall out of the money, that's going to give you a pretty explosive move to the upside. And again, with only 5,000 calls in the money, there is a lot of dry powder with the option activity for this week. But forget all of that. It's not even going to matter, because with the economic calendar, you have a lot of important events happening this week. So on Monday, you're going to get Fed Bowman that speaks at 8 o'clock in the morning, and that's pretty much going to do it for events and data on Monday. Now, Tuesday is when things really start to get crazy, because you have the inflation rate year over year, the core inflation rate year over year, and the core inflation rate month over month, as well as the inflation rate month over month. In your minds, you should really discard the inflation rate year over year or the core inflation rate year over year. Those are not going to be the things that drives the market reaction, at least in my personal opinion, unless they are like huge, right? Way higher than expectations or way lower than expectations. Probably not going to happen. People care about the month over month data. Did inflation go up from December to January? That's going to be the big question, and that data will be brought to us in the month over month rate. So for core inflation, just so you guys are aware, core inflation excludes food and energy, very volatile sectors of the inflation report. You're expecting for the month of January this number to come in at 0.3% of a gain. Last month's reading in December was positive 0.4%. So you're expecting this to go down month over month. If that happens, great, that's going to be awesome. but the inflation rate month over month, get this, in December came in at 0.1%. You're expecting a 0.4% increase. And just for a reference here, because these look like small numbers, 0.1% annualized on a 12-month basis is 1.2% inflation. A 0.4% month over month annualized inflation rate is almost 5% for a year, much higher than the Fed's 2% target. So it's going to be very important really what this core inflation rate comes in at, because we're already expecting the inflation rate month over month, the headline number, to come in very high. If this feeds into core inflation, that's where you're going to get some problems. So if core inflation comes in at 0.4% or 0.5%, which I think is actually more likely than not, that's where you can get a bearish reaction in the markets. And personally, I do think Fed Jerome Powell already knows the inflation report's going to be high. That's why you've had Fed Kashkari, Fed Bostic, so many Fed speakers last week come out and say maybe the Fed funds terminal rate is going to have to be higher than what was previously forecast to us in December. And just so you guys are aware, it was about 5% is where the Fed thinks they're going to get interest rates and hold interest rates before ultimately they end up cutting somewhere down the line. So that's going to be very important coming on Tuesday. And then after that, at 11 o'clock in the morning, you're going to get Fed Logan that speaks. At 2:05, you're going to get Fed Williams that speaks, and that's going to do it for Tuesday. Now, for Wednesday, let's go ahead and see. You're not going to get too much early. Let's see, actually. 8:30 in the morning, retail sales month over month. You're expecting a negative, or last month's reading for December was negative 1.1%. You're expecting a positive 1.2%. So this is kind of like the worst case scenario, right? If retail sales come in at a 1 to 1.5 or 2% gain, that's probably around the numbers. I think it's probably going to be pretty spot on, around 1.2%. If you get good retail sales and a really bad inflation report, that's like the worst case scenario for the markets, because the economy at that point not slowing down, people still spending massive amounts of money while inflation is starting to accelerate again. Now, if retail sales actually comes in lower than this and inflation comes in lower, that's going to be good. And one of the most positive things I would say we have going for us is the markets are already expecting an increase to inflation. It's not like we're heading into this inflation report expecting inflation to continue to come down, at least not with the headline CPI month over month. Core inflation, you are expecting it to come down, but not by that much. So I think that gives you a little bit more of a cushion. You're going to have to see a larger increase than what the markets currently expect, right? We just went over those numbers to actually get this worst case scenario, in my personal opinion. Retail sales, though, will be very, very important coming on Wednesday. And that's pretty much going to do it for Wednesday. Now, on Thursday, you're going to get building permits, preliminary numbers for January. Now, this may or may not be important. It's not something that's going to cause a 2 to 3% down move. PPI month over month, now that could. Last month, you got a negative 0.5% rating. Now you're expecting a 0.2% increase. So pretty much across the board, you're expecting these inflation reports, whether it's PPI, the producer price index, or producer price inflation, however you want to look at it. You're basically expecting everything inflation-wise to have gone up. Now you're also going to get initial jobless claims for February 11th. You're expecting 198,000 initial jobless claims. Last month you got 196,000 initial jobless claims. And if it comes in line with expectations, well, it's going to show the labor market continues to be hot for another week. You're going to get at 8:45 a.m. on Thursday Fed Mester that speaks, Fed Cook that speaks at 4 p.m., and then Fed Mester again at 6 p.m. Now, on Friday, you're going to get import prices, export prices month over month. Not going to be a big deal. I think the markets at this point are going to be digesting so much data that you could very well be in a big downturn move or a big upside move, right? Just depending on how the data comes out. If it's really skewed towards, things are not good, inflation is rising, the labor market remains hot, and people are still spending money, you could see how that could create a very negative overall market perception of where we are at in the stock market. Because if we go ahead and pull up the calculator, right? I think this is very important for everyone to understand. If the markets are correct and the S&P produces around $230 of EPS for 2023, which would be about a 5% increase from around the 220 number we got in 2022. Well, if you times 230 by, let's call it a 17.5 times multiple, let's do it. That's 402.50 on the S&P. You're trading at 405 on the S&P 500. So right now the markets are expecting earnings to grow in 2023 by a pretty decent amount. Well, if inflation continues to go up, and let's say that feeds into the markets perceiving lower earnings, well, let's say earnings actually drop year over year. Let's say EPS is 210, give it that same 17.5 times multiple, you're at 367.50 on the S&P 500 very, very quickly. Not to mention if multiples contract here. So there's a lot of room, in my personal opinion, for a downside move, for a downside expectation in earnings based off of the data that we get for this report. And that is why it is going to be very important what these numbers come out as, because after all, this is the first inflation report for 2023 and markets have been off to the races so far. Now, with all of this out of the way, that is going to do it for your economic calendar lineup for this week. Let's get into more specific information with AMC. And we're going to start with this. So AMC has now paid down $365 million of its debt so far. And on Friday, they did pay down another $85 million worth of its debt. This normally would have been seen as a pretty good thing, but Friday was not such a good day, and for multiple reasons Friday wasn't a good day. But I think by and large, it was potentially Antera Capital selling some of their stake, or you could be getting more of that fear with just Bed Bath & Beyond, or the anticipation of potentially earnings, right? You tend to see sell-offs heading into earnings. This is nothing new, and that's kind of what we were battling last week. And because of that downside move, the short interest has increased. Now, the FTDs are also increasing. Like I reported to you guys in the last couple of videos, this is very basic information to get your hands on. But if we go ahead and pull up AMC stock FTDs, you will see, let's do this. I like this source. You'll see for Monday, for February 13th, you are going to get 1.5 million FTDs that need to be bought back. On Tuesday, 1.4 million FTDs that need to be bought back. And on Wednesday, 1.3 million FTDs that also need to be bought back. So with that information out there, guys, you could see, a bullish reaction in AMC, especially if inflation comes in not as hot as expected. I would expect the markets to rally, and especially a lot of these stocks that have been getting shorted into the ground should fare very well, and that would be AMC. Now, keep this information in mind when we do get into the technicals. All right, guys, and I know I said we were going to go over this article in this video, but to be quite honest with you guys, this video is already like 13-14 minutes long at this point, if I'm looking at it correct. And this was another almost 10-minute long segment. So this is going to be in its own video, so you guys definitely want to pay attention to when that one does come out. But I do want to go over the technicals and give you guys the price prediction of which this video has promised to do for you. Now, with AMC, now, I know a lot of people hate this, and I get it. Trust me. I wish I had a crystal ball and I knew exactly which way AMC was going to go. Trust me. I wish I did. But especially this week, it's a lot harder to give you a definitive answer, right? Over the last couple of weeks, I've been pretty straightforward with thinking the stock was going to go higher, and that's exactly what happened. I mean, not to pat myself on the back or anything, but you didn't have huge economic data. Sure, you had earnings, but it's not like the CPI report that's going to take the markets up or down really 3 to 4%. That could happen on any given day, depending on how this inflation report comes out on Tuesday. So You're in for a very big move. Now, things have gotten so bearish so quick in AMC, it instinctively makes me think we're going to get a bullish reaction in the stock for this week. After all, you are sitting at roughly this support level around 490. AMC sitting at 489. It should serve as a decent level of support, at least to open Monday. And if you can get a bounce at these levels, then I would think you could break out above the resistance level at $5.30 per share, and even possibly make your way up to $5.50 or $6, this downtrending level of resistance. Now, if we can get in this triangle, this odd shaped triangle shape, that's going to be a very bullish situation, and that would make me that much more bullish heading into earnings. Now, if we continue to fall from here, the next level is going to be 450. You want to see if we hold up support at that. That is roughly where we low ticked just on Friday at $4.64 per share. So I think 450 will be a very big level of support. If you fall under that, then you're probably going to about $4.30 to $4 per share. Now, that is not my base case scenario. That's not where I'm going to put my price prediction. My price prediction is really going to be in between 550 and this resistance level, this downtrending level of resistance. Now, if the inflation report comes in positively, I think you could break out above this downtrending level, just because the expectations are so high that inflation will go higher. If the markets have it wrong, and then just analysts overall have the expectations for the inflation report flat out wrong, and it comes in lower and it actually drops somehow, well, that is going to feed into a very bullish reaction in the overall market. So bottom line here, my price target is around 550. That would be an upside move from here. If we go ahead and take a look, that would be about 12% for the week. My higher end price prediction would be about 20% on the week. Now, if we get a Goldilocks kind of week, I think you could easily hit $6 to $6.50, and that would put us back in this range that we were in. But since a couple days have passed, it really brought down this downtrending level of resistance, and to get above that is going to be the most bullish outcome for this week. If we go ahead and take a look at some key technical indicators like the MACD and the RSI, the MACD is still in bullish territory, but you did see this divergence. The yellow line went below the blue line, so that is technically a bearish signal, and the RSI is at 43.26, meaning it's kind of on the the oversold side, obviously not 30, so you're not deep oversold like you were back here when you were hitting the lows at $3.77, but it does show that you're probably due for a bounce. Typically, when AMC does get to these levels, you can tend to see some bounces, guys. So that is going to be all for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Most importantly, enjoy the rest of your day and let me know who is going to win the Super Bowl.